This is Matthew Kratter from Trade University, and today I want to answer the question, is there a scenario in hyperinflation where U.S. stocks and U.S. real estate could go to zero, and by extension, stocks and real estate in your own country? This is a follow-up to yesterday's video about how the U.S. dollar dies and signs that we're seeing that the world is transitioning off a U.S. dollar standard. And one of the questions someone had, Ed Vedder 7835, how quick of a collapse could the dollar drop? Could we see all our stocks and real estate being equal to zero? Is that the possible prediction we could have on hands? Scary times. So I wanted to answer that in this video. But before I answer that, I want to say that in that video and in this video, I want to repeat, I'm not predicting a hyperinflationary collapse of the US dollar anytime soon. All fiat currencies eventually die, but the US dollar is presumably not going away anytime soon. It has very strong network effects. All fiat currencies are sinking boats, but the US dollar is one of the best and one of the strongest, just given the US's place in the world and the fact that people have been using dollars for a long time now. And so you have these various network effects. It's very widely used in global trade, and especially commodity trade, which gives it a lot of natural buyers and holders. And we talked about this yesterday, where gold and oil and other commodities are mostly still priced in US dollars. But the question here is, what does happen to stocks and real estate in a hyperinflationary collapse? I don't think that's coming tomorrow in the US, but when it eventually arrives here, or if it arrives in your country, what happens? Do stocks and real estate go to zero as the currency hyperinflates and you need more and more of the currency to buy a loaf of bread, for example, like in Weimar Republic? Well, the answer is fairly counterintuitive. So if, for example, we'll look at a couple examples of economies that have gone through hyperinflation. Zimbabwe is really the textbook example, and they've been having problems with very, very high inflation rates really since the mid-2000s. And when my kids were younger, I got them all these $100 trillion bills, which were so worthless at that point that you couldn't even buy a loaf of bread with them. But these still exist and give you an idea of the extent of the hyperinflation in Zimbabwe. So the question is, this was very bad in terms of a social collapse, but what exactly happened to the stock market in Zimbabwe during this hyperinflationary environment? And what will surprise a lot of you who haven't been watching this channel for a couple of years is how well the stock market did. The Zimbabwe stock market almost always goes up, with a few exceptions. 2022, it did go down a bit, but even this year in 2023, you'll be surprised to learn that it's almost up 40, 49, 50% just since the beginning of 2023. And it's gone up many, many thousands of a percent over, we can see back in 2020, it was below, I don't even know what the scale is here. It's so low, but it was somewhere below 20,000. Now it's above 95,000. We see the same thing in Venezuela, which has been contending with hyperinflation. The stock market there, the IBC is up 31% since the beginning of 2023. And another example would be Argentina, which in 2022 had its highest annual inflation rate since the early 90s. It had inflation of almost 95% just in 2022. Imagine how terrible that is. And what did the stock market do in 2022? It went straight up the entire time. And as we speak, the Argentinian stock market is up almost 29% in 2023. So this is a surprising result that is a little bit counterintuitive unless you understand what is happening. Most often what happens in these hyperinflationary environments is the domestic stock market will go up a lot, but it will still go up by less than the amount that the currency has gone down. So you should not rush to convert your US dollars or euros or yen to invest in Argentina or Venezuela or Zimbabwe, because you will make a lot of money on the stock market, but the underlying currency will collapse even faster, and so you will not come out ahead in most cases. So for example, the Merval in Argentina being up 29% in 2023, you can be sure that the currency has gone down by more than that measured against major currencies like the US dollar. So what happens is investors in these places, they end up losing purchasing power, even though they're seeing amazing investment returns on their portfolio. And sometimes, especially in pre-internet days when we didn't have the same sort of global communication, people in these isolated environments sometimes think that they're getting very, very rich. So for example, the Germans in the 1920s in the Weimar Republic, when they went through this hyperinflation and you needed a wheelbarrow full of German money to even buy a loaf of bread, people who were speculating in the stock market and real estate, etc., thought that they were getting rich because there were these huge, huge returns, when in fact they were not in terms of real purchasing power. If you want to read more about this, When Money Dies is the classic book that talks about inflation and Weimar hyperinflation. So what explains this paradox of rising asset prices when a currency is dying? It makes a certain amount of sense in the sense that, for example, a loaf of bread goes from being $10 to being $10,000. So you might expect other asset prices to go up as well. Obviously, bread is perishable, but something similar is going on. When you own a productive enterprise like a company, a software company, a factory, something like this, or a house or apartment that you can lease out, you can actually accept payment in any currency. So for example, you own some real estate in a country and it gets taken over by another country and the currency changes, assuming that you still have your house and it hasn't been taken away by the victors, you can still rent that out in the new currency and it functions as a productive asset. You can also raise your prices if you have a product that people need. So for example, if you're a factory, if you're a company that makes bread, you can keep raising your prices with inflation. And the real question of your profits is just a question of margins. Can you raise your prices fast enough to keep up with your rising input costs? In this case would be flour and yeast and whatever else you put in your bread. It's important to remember that this is what stocks really are. They are equity shares. They're shares of a productive enterprise or a corporation. So for example, Coca-Cola, Coke can sell their sugar water. They can they can sell it in US dollars or euros or yen or renminbi, or some fiat currency of the future, some CBD perhaps, or they could even in the more distant future sell their sugar water for Bitcoin. Coca-Cola obviously is a productive enterprise. It's one of the most famous companies that Buffett has owned for a long time, though it's been quite dead money for some time. Likewise, real estate, landlords can be paid in whatever currency they want, any of the same currencies. Landlords can even accept Bitcoin at this point if they choose to. And this is what makes stocks and real estate a decent hedge against currency devaluation. It's not a perfect hedge, but if the US were to enter a hyperinflationary episode like Zimbabwe or Venezuela or any of these other countries, we would expect stocks and real estate to soar. At least that would be my guess. We'd see similar charts to these. By contrast, holding US dollars or holding bonds, which pay a fixed coupon, would be the worst thing that you could do. So if you're expecting hyperinflation, you definitely don't want to stockpile physical cash, physical dollar bills under your bed. You're going to get wiped out. Much better to have a small business that that there's always going to be demand for. Maybe you cut people's hair, you bake bread or something like this, or you have some sort of real estate because people are always going to need shelter, food and shelter in particular. So what we see in these environments of hyperinflation is we see stocks go up and real estate goes up. Everything seems to go up. So then the question would be, what's the best asset to hold in an environment of hyperinflation where the local currency is in its death throes, like the Reichsmark in the Weimar Republic? Should you hold stocks? Well, if you reach a certain level of societal breakdown and the government panics, what's going to happen is your brokerage account can and will be frozen or confiscated by the government or by a foreign government. Real estate, your properties can and eventually will, if you're experiencing a social collapse in your society, your properties can and eventually will be confiscated by the government or occupied by soldiers or occupied by thieves or something like this. And it can be very hard to protect property rights when you're in the middle of a societal collapse. Physical gold is obviously a good hedge against currency devaluation, but it does have its problems. Are you going to store it in a bank? Not a good idea in a crisis. They might not let you back in the bank. They may confiscate your gold like Roosevelt did to the American people in 1933 as a result of Executive Order 6102. He stole from the American people, stole all their gold, and put it in Fort Knox. And the reason he was able to do this is because most of the gold was sitting in vaults in banks. So physical gold is a problem. Are you going to store it in your house, which is being occupied by soldiers or thieves? Probably not. Are you going to walk around your failed state in a state of collapse with your gold in your pockets, gold coins or gold bars? That's not going to happen either. So this is the argument for why the best asset to hold in an environment of hyperinflation because you want to hold scarce assets. You don't want to hold paper money that can be printed up, or digital paper money that can be printed up. The best asset to hold are these scarce assets, real estate, stocks, etc. And the scarcest asset that we know that has value is Bitcoin, of course. Bitcoin is a cryptographically verifiably scarce asset that no one controls and no one can debase by printing more of it. And the nice thing about Bitcoin is you can also store it in a brain wallet and leave the country. You just generate a wallet, you create a recovery seed, a backup, 12 words or 24 words, you memorize that, and you're able to move any amount of Bitcoin out of the country. And it's much easier to do this than walking across a border with a gold bar in your suitcase or gold coins in your pockets. They're almost certainly going to get confiscated, especially during really rough times like this. You obviously cannot take your stocks with you, your gold with you, or your real estate with you. These are not mobile assets in the same way that Bitcoin is. And this is one of the things that makes Bitcoin so valuable. It's mobile, and it's also censorship resistant, and it's also a non-confiscatable or unconfiscatable. So what's the conclusion to this? In an environment of hyperinflation in the US, I would expect stocks, real estate, gold to soar. Bonds will get clobbered because they offer a fixed coupon. And so if you're making 5 or 6% on a bond and the currency is collapsing underneath you and the coupon doesn't adjust, you're in trouble. And also if you're holding government bonds and the government stops paying, or they pay you back with printed money, these are the problems. You don't want to own paper in this sense. And the other problem with bonds is you usually hold them in a brokerage account as well, which can be confiscated just like stocks. So in an environment of hyperinflation in the US, I'd expect stocks, real estate, gold to soar. But Bitcoin, I think, will outperform everything else, given its very special properties. The next question, of course, people will have is, what about Ethereum and other crypto? I would say the problem with these is almost all of them are now proof of stake, especially Ethereum after the merge. And proof of stake coins trend towards large regulated staking pools that can be manipulated by the government. So during a crisis, you don't want to have to rely on Brian Armstrong or the venture capitalists behind Lido to protect your money and allow transactions that the government doesn't like to still go through. And it'd be very easy in a crisis situation like this for the US government to step in and take over all this validation. And you'd have the hostile regime basically creating blocks and validating blocks on Ethereum or Cardano or whatever it is. Now, this is why Bitcoin's proof of work is so important. It makes it so much more neutral. If we take a look by contrast at the different staking pools for Ethereum, we have Coinbase at 11%, Kraken, which is now winding down their staking pool, and then we have Lido Finance at almost 25%. So we would expect to see more and more centralization here. And this is why you don't want to be holding a proof of stake coin going into hyperinflation. We can see that Ethereum validators are already 62% of the blocks are enforcing US government censorship, and we're not even in a crisis yet, or an overt crisis, as you would expect with hyperinflation. So this is not the place to be. If you think Ethereum's going to outperform Bitcoin in an environment like this, just because it goes up a little bit more than Bitcoin in normal times in a bull market, you're sadly mistaken. And this is why I spend so much time comparing Bitcoin and Ethereum, because they have very, very different fundamentals. And in a hostile environment, you need to know what you're holding, and you need to know whether it will still be robust and anti-fragile in that sort of hostile or hyperinflationary environment. I've said many times on this channel that when we eventually reach this point, and some countries will reach this sooner than others, probably much sooner than the US, the question people will be asking themselves, it's like a glass of water in the desert is the metaphor I always use. What is the proper price for a glass of water in the desert? Well, it's not worth that much if there's other water available, but if it's the only cup around and you really, really need it to survive, it can have almost an infinite price. And if you have the money, you'll be willing to pay it. And so I was amused to see this article from Forbes. The title of it is "Regardless of Price, Bitcoin is a Lifeline for African Refugees." And it talks about Eritrean refugees and how they're using Bitcoin. And I think this is ultimately how every country ends up with a collapsed government like this. And it happens everywhere. It'll eventually happen in the US as well. But I think this was interesting to see that Bitcoin being used in this way. And this is not people trading it. This is not people speculating on it. This is people using it to survive a very rough environment. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. and let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.